Good evening, everyone. Welcome to the channel. Today I am going to talk about Nanshan Al Intl interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Nanshan Aluminium International Holdings Limited provides the following businesses and services. The company offers alumina production and sales to various countries including Malaysia, Hong Kong, Singapore, Indonesia, and South Korea. Specifically, it supplies aluminium hydroxide, a key component in manufacturing electrolytic aluminium. In addition to its core business, Nanshan Aluminium also provides management consultation services to support the aluminium industry. Its primary clients include aluminium producers and commodity traders who rely on the company's alumina products for their operations. Nanshan Al Intl's stock price surge. A year of robust growth the past year has seen Nanshan Aluminum International's 2610 stock price skyrocket by an impressive 69.25%, driven by a combination of factors. The company's strong interim financial results, which included a 124.19% year-on-year increase in profit attributable to shareholders and a 41% rise in revenue, set the tone for its remarkable growth. Positive analyst ratings and increased target prices from investment banks, such as CICC, further boosted investor confidence. The anticipation of Nanshan Al Intl's inclusion in the Hang Seng Index also generated significant interest among investors. Additionally, the company's announcement of an interim dividend of $0.65 per share sent a positive signal to the market. These factors collectively propelled Nanshan Al Intl's stock price from its all-time low of 20.4 HKD on April 8, 2025, to an all-time high of 51.36 HKD on August 21, 2025, representing an increase of over 150% within that period. The company's robust growth and increasing investor confidence have cemented its position as a leading player in the alumina industry. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, strong demand growth across Southeast Asia has contributed significantly to increased sales. Additionally, a notable increase in average selling price by 41% has also played a crucial role in revenue growth. Furthermore, an increase in sales volume by 3% has also positively impacted revenue. The company's alumina sales have seen a substantial growth of 41%. With sales increasing from $423,260 to $596,814. Customer A and B transactions have also experienced significant growth, with increases of 14% and 32% respectively. Geographically, Malaysia and Hong Kong have shown notable revenue growth, with increases of 14.1% and 49.6% respectively. These factors collectively contribute to the company's overall revenue growth. Net income and profit margins. A shift towards growth. The net income of the company has experienced a significant increase, with a 70.1% rise on page 8 and an even higher 124.2% jump on page 9. This substantial growth can be attributed to various factors, including the absence of withholding tax related to dividend distribution last year, and a decrease in deferred tax related to undistributed profits. Profit margins have also seen a notable improvement, with a rise from 41% to 50.9% on page 8. The increase in sales and gross profit margin on page 9 further contributed to the growth of profit margins. By 2025, the company's gross profit margin reached 52.1%, operating profit margin stood at 50.6%, and net profit margin increased to 40.7%. The introduction of the Pillar 2 model rules has led to an increase in top-up tax exposure, which may have a negative impact on future profits. However, the overall trend suggests that the company is moving towards growth, with significant improvements in both net income and profit margins. The company's financial performance indicates a significant improvement in its ability to generate positive operating cash flow. The 6-month period ending June 2025 saw an increase of $66,070 in net cash generated from operating activities compared to the same period in 2024. This upward trend suggests that the company is effectively managing its operations and generating sufficient cash to support its growth. Regional performance review. The financial performance of our company varied across different regions and segments in the recent period. Notably, Hong Kong and Malaysia demonstrated strong growth, with revenue increases of 49.6% and 14.1%, respectively. In contrast, Singapore experienced a significant decline in revenue, with a decrease of 50.8%. Unfortunately, no data was available for Indonesia, while South Korea's revenue figures were not provided for the year 2025. These discrepancies highlight areas that require further investigation to understand their underlying causes and potential opportunities for improvement. Management is optimistic about the company's future prospects. They plan to expand annual alumina production capacity to 4 million tons, indicating a focus on growth and increased output. Additionally, they aim to capitalize on opportunities in upstream business areas and leverage the Hong Kong listing for further expansion. The funding for their new alumina production project will come from a combination of internal resources, global offering proceeds, and operating cash inflows, demonstrating a commitment to investing in the company's future while maintaining financial stability. The company's financial summary reveals that it has a history of paying dividends to its shareholders. This indicates a commitment to returning value to investors through regular distributions. Conversely, the company has not engaged in share buybacks, suggesting an alternative approach to allocating excess funds. Concerns over inventory buildup emerge. A review of our financial summary reveals growing concerns over inventory buildup. Notably, raw materials have increased by a significant 71% from $54,357 to $92,778. Furthermore, purchases of bauxite and other raw materials have also seen substantial increases, totaling plus $18,839 and plus $10,475 respectively. These figures suggest that our inventory levels are rising at an alarming rate, potentially leading to storage costs, reduced liquidity, and decreased efficiency. That concludes the financial summary for Nanshan Al Intl. Feel free to comment below, and I will be happy to answer them when possible.